Thanks for joining. And so a bit of context. So well, I know all of you actually in that call. So introductions might be easier. Yeah, why are we doing this webinar? So hi Alexander, welcome. We're just starting. So I was saying that, so just for introduction, so my name is Armand. I'm the product team lead at Aurora Labs, which is the company behind the protocol Aurora, which is itself a EVM compatible chain on the NEAR ecosystem. And we are hosting this webinar because we see tokenization of real-world assets as one of the main drivers for blockchain adoption, and in particular, real estate tokenization, where we see a lot of initiatives and a lot of drive. So we're going to go through a presentation. Since we are not that many on the call, we can definitely make it more interactive. So if you have any questions, please don't hesitate to speak up. And of course, I have time also for questions if you want to explore some details. Great. So we're going to go through a few points. First, the challenges of the current real estate market. Then, what is real estate tokenization, if you're not familiar with it already, and its opportunities for businesses and investors. Then we're going to go through a couple of examples to see how tokenization works. And finally, how Aurora Cloud can support those initiatives. So, so the real estate market itself is one of the prime choice for investors, professional investors, because it's considered a low-risk one with stable returns. But it had a number of challenges, not only due to the economic situation. So, for example, we've seen that in Europe, there's been a 64% reduction year on year in real estate investment. And that means that companies are looking for ways to revisit their operation in that space. And they are looking at the current challenges that not only investors are facing, but also companies. So those include, for example, the high cost of entry. So today, if you want to invest in a property, you will need at least tens of thousands of dollars, if not 100. And that makes it difficult for you and me, for retail investors, to just enter the space. There's also complexity in securing that investment, but also on the administrative side. So investing in a property can take a lot of paperwork, of time, and it's not a seamless process. The other challenge is that once you have invested in a property, your investment is not liquid. If you want to sell one day, you simply can't. You probably have to wait. Well, first you're subject to the market volatility. So the time that you sell, you might lose some potential returns. But also it just takes time to go through the paperwork, find a buyer, and just sell your asset. And when you don't have any control, especially control over your investment, not only because it might be held by a third-party company, but also because you can't really diversify it as much as you want. If you have 100,000 to invest, you might invest in one property, but you can't just split it in a lot of different assets. So what is real estate tokenization? I'm actually asking you the question. If anyone wants to jump in and give your definition, I'm all ears. Anyone wants to try? There's no bad answer because it's such a new term anyway that I think at this point it's really subjective. But the kind of unofficial definition is that Tokenization is the process of fragmenting an asset into digital tokens that are representing the underlying property, in the case of real estate, with all its rights and obligations, right? So what does that mean? So that means that you're taking, first of all, a house, and you are going to represent its ownership by a multitude, by a number of tokens that are issued on chain, on the blockchain. And it has several benefits. So for investors, that means that first you get access to fractional ownership. So like I mentioned before, it's a high cost to entry, but if you fractionalize your property, you can start selling a fraction of it for pennies. So basically, you reduce your entry cost from 100,000 to $1, even less. And that also means that once your assets are on chain, they become much more liquid. So the crypto market, let's say, is always on, and once everything is automated on chain, you can freely buy and sell whenever you want, and you are not restricted by finding a buyer for your entire flat and going through the complex process. And for companies, what that means is that not only you increase significantly your addressable market, because suddenly your market is not just high net worth individuals or companies, but retail investors. That also means that you can diversify portfolios. So like I mentioned before, if you have 100,000 to invest, instead of putting everything in one house, which might be risky, you can split it across thousands of different investments, which makes it much more diverse. And finally, the benefits of blockchain in general are transparency and tamper-proof transactions, which means that auditing and reporting become much easier in the future. So, quick note about the market itself. So today it's estimated at being a 200 million market in 2023. But according to projection, it can range from 13 billion to 1 trillion by 2030. So here, Bloomberg and Deloitte have different estimation, but what we can see is that all agree that this is a booming market, and it's only going to increase by a lot of multiply. So it's definitely a market to watch. So we identify different types of tokens. So we keep talking about tokenization, but there are actually different types of tokens. The first one are security tokens, which those security tokens mean that there is a return on investment that is expected. So typically, if you buy a token that represents the ownership of a property, you expect to make a return from the appreciation of that asset, but also, for example, from the rent return that you get. So that implies there are some strict regulation around security assets that can also differ from jurisdictions. The second type are utility tokens. So those they don't mean that there is an expected return on investment, but they can instead give you access to services or perks. So, for example, a platform that would have buyers and sellers, they can issue utility tokens to reward their loyal customers that would then give them perks. For example, more visibility on the platform or access to private sales, things like that. Yeah, question from Alexander, and sorry, I missed your first question, but I can take it as well on that slide. So on security tokens should have special format as just about legal part. So tokens in general, the classification of tokens need to be reviewed by a legal entity. So I can't really tell you the exact definition or the format. It's something to be looked at by professionals, because it can differ greatly from jurisdiction, from your company situation, and also going into the details of what is the token doing. And for example, there's the third type here, the hybrid one, which is where the complexity comes, that can have aspects from both types. So it can expect a return on investment, but also give you access to perks. So yeah, it really has to be looked at from like at a case-by-case basis, I would say. And how to be with shares if major owners, 51% want to sell. So that's the advantage of tokenized property. So since so it also depends on how things are set up, but once you have all your tokens that represent your flat, for example, on chain, you can put them in the open market. What that means is you don't need to get the agreement of all the owners to sell your share, to sell your parts. If you have 51% or even just 1% of the tokens, and those tokens are traded on the open market, you can just go and sell them. You don't need the approval of anyone else, and that's an instant and accessible transaction. Cool. So, just to complete on that question, so if minor owners don't want to sell, so it doesn't matter. So if like 50% are sold, it might just increase the price just due to the market mechanics, depending on the demand and supply. And the other holders of the token would just see their investment vary depending on the market price. Yes, so if you want to own everything by yourself, so again, that's it depends on how the tokenization company wants to address the mechanics. But if we assume that all the tokens are on the open market, well, you could gradually buy those tokens from the market, assuming that other holders want to sell. But if you have like buying pressure on the tokens, that means the price will increase, which means that there is a more incentive for holders to sell their tokens. So yes, that's in the case of open market. We could imagine another situation where you are actually dealing with a company where the company is tokenizing the property, and you actually have some sort of a scheme on chain where you progressively buy the token back. So again, that's a business model that can be defined by the company that does the tokenization. So let's go through for an example. So the more let's say obvious one is tokenizing property ownership. So let's take Alice that has this tokenization platform, and she has a property that is worth $200,000. The first step is that she's going to take that property and issue tokens that are representing that ownership. Here, the number of tokens is completely arbitrary. So she could issue 200,000 tokens, which means that one token will be worth $1, or a million token, which means that they will be worth 20p. And from there, they can start selling those shares to investors. So again, here they purchase it based on the price, and they are free to buy as many as they want or as little. And what's the consequence after that? So what's happening? There are two advantages for investors. The first one is that the rent, for example, if that property is rented, the rent that is collected is redistributed to the token holders. So if one investor has 20% of the tokens, they will collect 20% of the monthly rent, etc. So that creates a stream of revenue for those token holders. The second one, like I mentioned, is the property appreciation. So the property itself has an estimation and follows the market. So if it increases by 20% in 2 years, this will be represented by the token value, and the token holders will benefit from that appreciation. Okay. Second example is fund tokenization. So here we have Bob, who has an investment fund, and it's basically, so it's an organization that has a park of properties. And here, instead of tokenizing each property, they will tokenize the fund itself. So there won't be like tokens per property, but there will be a token that represents the entirety of the fund. And what that means then is that they can start selling exactly like in the previous example. They can sell those tokens to investors, and the fund then will redistribute the profits made from that park of assets. So here, the investors, they get let's say a stream of revenue from their tokens, but they don't get a claim on the property ownership, which can work. You know, it depends again on the business model and how those companies want to set themselves up in the space. So so how do we tie all that together at Aurora? So I mentioned that Aurora Labs is the company behind the Aurora blockchain, and we have for mission to make blockchain accessible, and we do so in different ways. The first one is to provide the structure, infrastructure, and products for businesses to launch their blockchain initiatives. And on the other side, we are reducing friction in the whole journey. So mainly for end users. So that's why we have that product, which are Aurora chains, which are basically tailored blockchains for businesses. And then we have products such as Borealis, which is our free transaction management solution, which allows you to remove gas fees for your end users. And we know that this is one of the biggest friction points for end users in the blockchain ecosystem. And finally, we have also a mobile wallet that is called Aurora Pass, that again helps newcomers into the Web3 space to easily interact with the blockchain. So you have a simple sign up with an email, and in 30 seconds you can start interacting with the blockchain. So how do we? So Aurora Club helps on different sides, different aspects. First one is customization. For Alice, so she has all her properties, but she needs, for her business model, she needs an environment that can support that business model. So, for example, she might want her own token within that environment is used for transactions, but she might also want to customize the transaction fees for each transaction. So if she's dealing with high-value transactions, she might decide to set up 3% fee on each transaction, which she will collect whenever someone makes that transaction. And Elena, I'm taking also your question at the same time. Real estate tokenization is not regulated by any EU laws, still in gray zone. Yes. Investors are not covered by any law. They don't have successful use cases. Well, that's a really good point. And so indeed, the regulation are not, let's say, fully defined. There are things coming, like the MiCA regulation, that everyone hopes will bring some clarity. But there are ways to actually account for future regulation, and that's one of the aspects of our cloud. So one of the problems with public blockchain is that, well, by definition, everything is public, which means that once your assets are on chain, they can be traded by anyone, and you actually have no control of on who buys your assets, which can be a problem for businesses indeed. So one way we address this is by providing permissioned environments. So I mentioned those custom chains, and you can use that to your advantage as a business. Meaning, for example, for Alice, she can create different chains, one for France, one for the UK, for example, and both of those chains will be permissioned, which means that to interact with the chain and to make a transaction in there, users will have to go through KYC. So in the first chain, which is for France, there will be parameters for the KYC based on French residents, and same for the UK. That way, you ensure that whenever Alice lists a property in the French chain, she knows that whoever is here and can interact has gone through KYC and is a French resident. So she doesn't risk having, residents from other countries to buy her property. Another aspect that comes up often when businesses talk about using blockchain is security, and that is a big one, because today there's in public blockchain, there's on blockchain in general, there's not always the let's say the framework to support users on security levels. And that's one of the points that we address. So with our cloud, we have put in place some measures. For example, we are protecting users from fraud and unwanted behavior by monitoring all the transactions, the origin, and we're able to extract analysis from here and detect fraudulent behavior. And then the other problem that comes often is preventing users from sending assets to the wrong address. So that's a common, let's say, mistake in crypto. People are sending a lot of money to the wrong address. They make a typo. That address doesn't exist, or they made a typo, and they are just losing all their assets in one instant. So that, again, we are addressing with Aurora Cloud, because, again, we are setting up monitoring infrastructure that allows us to detect those type of mistakes. And we're able to prevent or to warn the user that they are about to make a transaction that would result in loss. Then on the another aspect is the interconnectivity. So we are talking about permission environment, custom chain, etc. But it doesn't mean that things should not be interconnected. And one of the advantage of our cloud, what we propose here, is that each chain can be connected to each other. They can communicate, and they can facilitate transfer of assets, for example. So again, depending on your rules, but from a technical point of view, each chain can communicate with each other, which means that you can have, in the case of Alice, you can have all her chains for each jurisdiction, while ensuring that some liquidity can move between the chains. And that is important, because that's one of the promises of blockchain, is to have this whole connected ecosystem. Yeah, that's about it on the Aurora Cloud aspects. So we went through a few questions, but does anyone want to dive into more details on specific questions, or if you have any comments, please share. Elena, for the use cases, we are currently integrating with a few clients, yes, that are in the real estate space. So they're not live yet, so hopefully we can share them soon. But yes, and those companies are interested in our cloud for the reasons that I mentioned, because they want to have those environments where they have a little bit more control on, especially on the permissions. So they don't want, you don't want to have a chain where people from North Korea come and start buying all your investment properties. So, for example. Any other questions? No? In that case, thanks a lot for joining. Thanks a lot for listening to me. I hope that was useful. We will follow up with a message with the ebook. So we said in the presentation of the event. So our team has put together an ebook that goes more in detail into all the points that I mentioned on real estate tokenization. And of course, if you want to learn more about Aurora Cloud, you can get in touch. We have an email here. You can contact me directly as well. And we also have a page that goes more into detail on real estate tokenization here with the QR code. A question from Alexander. Do you have already executed cases on tokenization? Yes. So again, so we have several clients that we are working with. One that we are in the final phases. That is an energy company that is tokenizing itself. So it's not in real estate, but the concept is similar in the way that the company's business model is to buy energy facilities in Europe and to sell the energy on the market. So that's a really simple model, and they are tokenizing the representation of their share online. And what that means on chain. What that means is that they open up the investment to everyone, and investors can buy those tokens, and they will receive. And the company will reinject profits into that token, which will appreciate over time. So that's one of the. So that's a similar case to the let's say the fund tokenization that I presented, where you are kind of tokenizing the company, and the token holders are receiving profits that are coming from that organization. Any other questions? All right, really good then. Thanks a lot, everyone, for joining again. And yeah, get in touch if you want to know more. Follow us on Twitter, and hope to see you soon. Thanks a lot, everyone. Bye.
Thank you. Bye-bye.
Thank you.